Jeff Bezos, Elon Musk, and Bill Gates are all positioned to pay zero tax this year. Want to know why? Well, because they are rich, and so they can use the loopholes in the tax system to avoid income tax. It isn't their fault, though, because governments have the power to levy taxes upon the people. There are different types of tax regimes. Some target every citizen in an equitable manner, while some target either the working class or the top income earners. The end goal of taxation is to generate revenue for the government. This revenue is then used to build roads, schools, hospitals, and other critical public infrastructure. Tax revenue is also used to pay off domestic and foreign debt. Now, this is the reason for taxation, but there is a lot of debate on how tax is levied on some individuals and not on others. There's always been a very valid question mark on the objectivity and vested interests of the policymakers. It's a well-known fact that lobbyists use their power and leverage to influence critical decision-making regarding tax policies. As a result, the big and powerful manage to create loopholes in the tax nets that enable them to pass through unscathed, while the average American gets trapped in the tax net cast by the government. There is really no point going further into this debate because this is the status quo that has always existed and will exist for the foreseeable future. The status quo, at least for now, cannot be broken. In today's video, we will be looking at ways you can effectively pay zero tax or at the very least minimize your tax bill at the end of the year. But before we start, make sure you like this video and subscribe to our channel for more awesome content. So, let's talk about taxes. Whether you belong to the working class or to the super rich, you will have to pay taxes in some way. Now, using the legal loopholes present in the tax system either by design or by default, you can minimize the amount of tax that you may be required to pay. Before we move on, we need to discuss two very important terms and concepts: tax evasion and tax avoidance. What is the difference between these terms? Well, one can land you in jail, while the other can help you save some money. Tax evasion is illegal. It refers to situations where individuals or companies use illegal means to either declare less or no income. This can include hiding income through fraud or misappropriation or any other illegal means. It has to be kept in mind that if the IRS finds you guilty of tax evasion, you can be penalized with criminal charges and substantial fines. Tax avoidance, on the other hand, is legal. Yes, there's nothing wrong with tax avoidance. It refers to using the facilities provided by the tax code and using the loopholes in the tax laws to avoid paying a higher value of tax. There are classes upon classes of tax code provisions that can be used to legally avoid tax. You can avoid tax by transferring your wealth into trusts, by using IRAs or availing tax holidays on designated provisions of law. At this point, it's important to revisit who makes the tax policies. Our elected representatives, right? Well, yes, but the elected representatives end up getting influenced by pressure groups and powerful lobbies that end up getting favorable tax benefits and loopholes placed into the system so that they can reduce their tax liability. This simply means that the tax code, regardless of everything, is biased towards the super rich. If you are a salaried individual or a self-employed contractor below a certain threshold of income, you will find it very difficult to use the tax loopholes to reduce your taxable income. Alright, so now we can divide the taxpayers into two categories: salaried individuals and business owners. For the salaried individuals, their tax is usually deducted directly from their salary by their employers, so the salaried individuals have very little opportunities to legally reduce their tax liability. The salary that you get is already net of tax. Some people assume that having a 401k reduces the amount of tax that you have to pay, but this is not so simple. The contributions to 401k accounts are not taxed at the time of contribution, but they will be taxed at a later date when the amount is withdrawn. So this is a type of deferred tax that you have to pay in the future. If you're lucky, the tax rates in the future may be lower, so you may save a little, but this is purely speculation. Salaried individuals can pay zero tax if their income falls below the tax net. But then that would simply mean that you have a very low income, and the moment you come into the tax net, you'll be required to pay your taxes. Another way to avoid taxes is to have children, and lots of them. Just kidding. If you belong to the low or middle income category, you may be eligible for a child tax credit. The tax credit for children is $2,000 per child and $4,000 credit on earned income. In addition to this, you may receive a $24,000 tax cut if you are married, or $12,000 if you are single under the TCJA. So if your annual income is around $24,000 to $30,000, you can end up paying zero tax by virtue of being in the low or middle income category. That's not too bad, but this means that you basically need to have children so that you can pay zero tax. Probably not the best strategy when it comes to saving on tax. Also, if your income level rises, then your tax bracket will rise, thus exposing you to higher taxes. Apart from this, you can reduce your tax liability through itemized deductions, such as health expenses, mortgage and interest payments, and contributions to recognized charity institutions. However, due to TCJA from 2018 onwards, itemized deductions have become difficult to claim for salaried individuals. So if you are an employee on a salary, then the chances of using the loopholes to minimize your tax liability are very low. However, if you are a high-income earner, and even better if you own a business of your own, then there are plenty of ways in which you can legally minimize your tax liability. Minimizing the tax liability or paying zero tax is possible, but it requires proper planning, for which you will need to hire qualified and experienced CPAs. Tax planning requires building up your wealth in such a manner that you can use the legal loopholes. Most Americans depend on the itemized deductions to reduce their tax liability. The rich, however, make use of loopholes and tax benefits available to them. One of the most common ways to avoid paying any taxes is through the use of municipal bonds. Municipal bonds are debt securities issued by states and local governments. Assume that you've got $1 million to invest, and you're looking for ways to minimize your tax liability. Well, you could simply invest your $1 million into municipal bonds, earn interest on your investment, and both your original investment and interest earned will be tax-free. Municipal bonds are free from tax. They come in different maturities, carry different interest rates, and are a very common way of avoiding tax on wealth and interest income. If you're a millionaire, you can literally invest all of your savings into municipal bonds and pay zero tax. This might sound unfair to the hardworking people who grind their bones day in and day out to earn a living and then end up paying a sizable chunk of their income to IRS, but there's nothing illegal about this. The basic premise of municipal bonds is that they pay tax-free interest. The more money you have, the more you can invest into municipal bonds. Thus, the super rich have the advantage by default. Another way in which tax can be minimized to literally zero is through the use of depreciation. Now, this only applies to those individuals who have business income. Depreciation is a non-cash expense. Tax authorities allow businesses to depreciate their assets over time, so basically what you have to do is show your assets as business assets. That car you use can be owned by the business and thus be declared as a business asset. Annual depreciation on the car and other assets can reduce the cash profit of the business, thereby reducing the amount of tax payable. Now, depreciation does not reduce the actual cash profit, no. Remember, it's a non-cash expense. Depreciation has to be provided by businesses to account for the wear and tear of assets. It's a financial concept that ends up creating a tax loophole. So, for instance, if the business income is $10 million and it has $2 million of solid cash profit and $10 million worth of assets depreciable at 20% per annum, then the depreciation on those assets would amount to $2 million. This is how 91 of the Fortune 500 companies in 2021 paid effectively zero tax. These companies include the likes of Amazon, Starbucks, and Chevron, just to name a few. Well, what happens when you subtract the $2 million depreciation from the $2 million cash profit? You end up with zero profit on paper, and zero profit on paper means zero tax payable. There's also initial or bonus depreciation provided under Section 179 of the tax code, which means that tax authorities allow businesses to write off up to $1 million worth of depreciation in the year of purchase of a fixed asset. This is an incentive for the businesses, which can be used to minimize the amount of tax payable. Another way to minimize tax payable to effectively pay zero tax is by carrying forward losses. If a business makes a loss, they can be carried forward, and as long as there are losses in the books, the business won't have to pay any tax. Of course, losses don't mean that the business doesn't have to pay salaries and bonuses. This is actually what happened when you look back at the dot-com crash. A lot of tech companies were spending money on lavish vacations, luxurious offices, and salaries, and were not focusing on growth, which resulted in low returns and the eventual crash of the market. So the bottom line is that you can literally pay zero tax if you're already in the rich category. However, if you're a salaried worker, you can still try to minimize your tax liability, but you won't be eligible for as many loopholes as the top 1% are. Moral of the story? Start a business and work for yourself. It will be the best way for you to make use of the current loopholes in the tax system. Whatever the case may be, try to use the services of a CPA who can make the whole process easier for you. Tax can be a very complicated subject, so always advise a qualified professional before making any decisions. What do you think? Did you find these tips helpful? Or were there any that I missed? Let us know in the comments section below. As always, I hope you enjoyed today's video, and I'll see you in the next one.